Today we're talking about the new changes in conforming loan limits. Let's get into it. Thank you again for joining us, and we have basically the best loan officer here in Tucson, I would say.
Thank you.
And Seanna Cormier.
Yes.
And she is the senior loan officer with Guild Mortgage.
That's true.
So, yeah. Thank you for coming here and explaining all of this stuff because it sounds boring to most people. And let's be honest, our job is boring. And we have to kind of explain all of these complicated things to everyone who wants to buy a house, right? So
I don't think it's boring though. I think it's quite fun. There's just a lot to it, and there's a lot of jargon that can sometimes fly over people's heads.
Right. So like the topic.
And that's Louis, by the way.
Yeah. Louis will be interjecting as needed with his expertise or her expertise. I'm sorry. I just met her today. So, okay. So now with the different loan types, we do have some changes in the max amount that can be borrowed, right?
That's right.
Okay. So can you explain like what those are in the different loan types for us?
For sure.
Okay.
So we've got conventional loan limits, and the new conventional conforming loan limit for most areas is going to be $726,200, and so that's for a single unit, single family home.
Okay.
They do go up from there if it's a duplex, a 3-unit, or a 4-unit. There's different thresholds for that as well.
Okay. And I do see Alaska and Hawaii have different limits. Is that just because they're more expensive, or what's the deal with that? Do you know?
Yeah, I mean, it would be because they're more expensive to live, and I think the cost of living is more expensive. So what you get for that same loan amount, I don't know. I guess I would have to do some more research about Alaska. Hawaii for sure.
Yeah.
But Alaska, that's, I would imagine maybe it's because of land. I don't know.
Okay.
It's a good question.
Yeah, because you're not buying like less than an acre lot there. It's probably multiple acres that you're buying in Alaska.
If anybody's interested, leave comments and we'll do a whole podcast on it.
Yeah, exactly. And you probably know a lender there that you can send people to if you needed to.
Yeah,
so.
absolutely.
And we definitely know a real estate agent. So if you are interested in those areas, we can send you good professionals down in that area. So, okay, so we have loan limits for
conventional.
That was conventional.
Right.
And FHA, which is the Federal Housing Administration, government-backed loan, also increased their limits. Okay.
So they increased theirs to $472,030, and that's for Pima County.
Oh.
Different counties do have different limits. I think that's for Pima County. I would have to double check.
Yeah.
Because they just changed, so it's like committing them to memory this quickly is I typically write them down on a sticky note and put it on my computer so that I can remember what they are for the first couple of months. But yeah, I want to say that's the new limit for FHA for Pima County.
Okay. And then the Veterans Affairs loan, the VA loan commonly called, and the USDA, which is the United States Department of Agriculture. I had to get there. I had to get through the whole alphabet soup for that one. Thank you.
I'm glad you did that instead of me. I'm just kidding.
and those are not affected.
Right. So, I mean, they do come into play, especially with VA. Like the conforming loan limit comes into play, but it doesn't mean that that's the max VA loan amount. So there's a whole calculation for that.
Yeah.
I think mostly like the big change, though, was to FHA and conventional loan limits because they went up a lot in comparison to how they normally go up year over year.
Yeah. Okay. And did a credit score also change with those, or did they stay the same?
Credit scores for now have stayed the same. There's been a couple of other changes, but honestly, those kind of changes aren't necessarily year over year changes. They're just random a lot of the times. Well, based on meetings, I guess, that they have, and then they come up with their with the new guidelines and regulations. So
okay, cool. And I know with the FHA, that's a pretty powerful loan for a lot of first-time buyers, right?
For sure.
So they can basically get a house with only 3.5% down minimum. I wanted to get to how this would affect like an everyday home buyer, right? Because now that we had so much increase in pricing, during the pandemic. Like everyone wanted a house, it seems like, because their needs changed, and equity shot up, prices shot up. So how do these changes help within that equation?
For sure. So with a conventional buyer, obviously they can get a larger loan amount without having to go jumbo or without having to split it into doing like a first and a second to get a lower down payment. So that's really helpful for conventional loan or conventional buyers.
Okay.
It helps them just avoid jumbo loans and or be able to finance more than what they could before.
Okay.
With FHA loan limits, those going up really help the FHA buyers because they were at, I want to say like 3 something. And so an FHA buyer may just have a lower credit score but have plenty of money.
Mm-hmm.
And so maybe they don't qualify for a conventional loan, or it doesn't make sense to be in a conventional loan, but then they were capped at that loan amount.
Yeah.
So now this opening up allows, with home prices going up a little bit more as well, helps an FHA buyer be able to finance more without having to go conventional and get, be at a disadvantage for that.
Okay. And I know that's why it's important to talk to a professional lender who knows this stuff
For sure.
and can actually walk you through each of these loan types that might fit you best and fit your needs best.
Absolutely.
And so why would they not want to go to a jumbo loan? Like, why would you want to avoid, or if you maybe reach the limit of that loan that they just increased, why would you might want to avoid a jumbo over like the max limit of one of those other types of loans?
It just kind of depends on the market at the time. So sometimes jumbo rates are not as favorable, and when you're borrowing a higher amount, then that can impact you more greatly, right?
Sure.
Or maybe you don't have a large enough down payment, and jumbo is going to require a bigger down payment. There's a lot of hoops to go through with jumbo loans as well.
Yeah.
Because it's a high loan amount, there's a lot of risk factors, so there's a lot of overlays that are kind of not overlays, but there's just restrictions that are placed on, or max limits to where you may not fit into the box for a jumbo loan.
Gotcha.
And so if you don't fit into that box for a jumbo loan, and then we do a first with a second, that's a whole nother loan that you're having to pay, which isn't a bad thing. I do it all the time for certain borrowers. It makes a lot of sense, but it just allows more flexibility and more options for a buyer.
Okay, so that when you say first and the second, that you're saying that to avoid the jumbo loan, you're doing one loan.
Conforming loan, yeah.
Okay, one like standard conventional loan, and then a second conventional loan.
A second lien, which it wouldn't be a second conventional loan. It would be more like a home equity line of credit or a home equity loan that would be placed in second position behind the conforming mortgage.
Okay, interesting. So this again, why you would talk to a professional about this, because I'm not licensed as a realtor to really talk about these things in depth, and that's why you would need to talk to one of your realtors. I think usually has a few really good lenders in their back pocket. And we always actively seek out the good lenders to sort of have, so we can have a good experience for our clients.
And have the knowledge, right?
Yeah,
Have
exactly.
someone to rely on that can answer those questions and that can find the answers and give you an educated answer and not just a thought or an assumption.
Hey everyone, we want to interrupt this episode to let you know that we are a Keller Williams Southern Arizona franchise.
We are also realtors practicing equal housing. Now let's get you back to the podcast. Right, yeah. That's what I give when it comes to loans. Not to houses, but to loans.
As long as you disclaim it that way, like, hey.
Yeah, I'm not a licensed lender. I'm a licensed realtor.
I don't know. This is what I know.
Yeah.
Based on my experience, but maybe it's not true. Check with her.
Right, exactly. I know I can talk minimally on that, but I make sure with, of course, the Seanna Cormiers of this world. So,
or just me.
Yeah, or just Seanna. And then I wanted to kind of go over some of these facts. Just the FHA credit score, 580 is the minimum, right?
So we can actually go as low as 540.
Oh, okay. Interesting. And do you have to have a larger down payment than the 3.5?
Yeah, you do.
Because it's a higher risk loan, basically.
Super high risk, yeah. Okay. Because if you're thinking about somebody who has a 540 credit score, they've probably done some damage to their credit to get it at a 540.
Yeah.
And so that being said, there are some extra requirements. And one of those things is it's a lot more favorable when you have a 10% down payment. And I know we require a 10% down payment under, I think it's 560.
Okay. And then you can go as little as 3% with a conventional loan, and that is usually backed by Freddie or Fannie, right? And those are the basically loan servicers.
Investor.
Yeah, they're the money behind the loan.
Right.
And they're the ones who will carry the loan for the life of the loan at 3%, right?
Right.
Yeah, it's not going to be like Bank of America or Wells Fargo. They're not going to pick up those loans.
Those are the servicers.
Yes. Yeah.
Yeah.
Okay. I'm glad I got those straight.
Yeah.
And 620, right, is the minimum score for the conventional 3%.
620 would be really tough to do for a conventional loan, to be honest.
So it'd be a higher interest rate at that point and higher risk loan.
If it'll work.
Okay.
I wouldn't put anyone in a conventional loan under a 640.
Okay.
Unless it made sense, unless there was no other options. Like I wouldn't say never, but
yeah.
You know, chances are it's probably not the best fit.
Yeah.
And that's where the FHA loan limits rising comes into play, because somebody who has a 620 is going to be in a far better position with an FHA mortgage than they would with a conventional.
Okay. These are so personalized. These loans seem so personalized depending on the scenario and their situation, right? It's not just like one loan type fits all sort of thing.
Right, never.
Yeah.
Every single loan is custom.
Yeah. That's interesting. Like the more I learn about that, the more I realize we have to talk in more generalized terms because we can't be specific. It's all in an individual.
I think the worst question I get, or the question I hate answering the most, is what are rates today?
Yeah.
I'm like, what are we talking about?
Yeah. Where's your credit at? How much do you make?
Yeah. Like what kind of down payment? What's our purchase price? Yeah. There's so many factors that go into it.
Yeah. And when you're under 20% on pretty much any of these loans, we have something called PMI.
Mortgage insurance.
And we're going to talk about that next.
So
stay tuned for that. And we'll see you in the next one. Thank you for listening and watching the Nitty Gritty of Real Estate podcast here with the Tom J. Krieger team of Keller Williams, Southern Arizona. If you are interested in buying a home, selling a home, or even investing in real estate, we have 5,000 agents across the country that we can connect you to. If you need any free resources, feel free to check out our website at www.thetjkteam.com. We hope you have a great day.